p.m. Chicago time on the 21st of October 2016. Thanks for joining me this whole week. It's coming to an end, so hang in there. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall picture from the overnight is again money's moving to safety. The market is selling off a little bit. We're seeing the Russell lead the pack down, the Russell being down 71 basis points, down 8.6 points, followed by the British pound. And then the U.S. indices, crude oil's at 28 basis points lower, trading negative 14 to 16 cents. Gold is unchanged, and the U.S. dollar is leading the pack, followed by the Japanese yen. Clearly, risk is not being allocated this morning. So that's how things are shaping up. There's not much else to report on the overnight. After earnings yesterday, Microsoft hit new all-time highs, and the euro hit 7-month lows. So there's not much more out there to talk about. As far as what we're expecting for today, the only we've got one key release this morning at 10 a.m. Eastern, which is the Eurozone Consumer Confidence Advance. -8 is expected. And then at 10:15, we get Fed Speaker Tarullo. And then at 2:30 p.m. Eastern, we get Fed Speaker Williams. And that pretty much closes out the day. This is the third Friday of the month, so we have S&P, Dow, and NASDAQ October 16 monthly expirations today. Let's take a look at what we had yesterday real quick. There it is. So yesterday we were trading around the 2134, 2135 area, and it was in range outside of value, but well inside of the last 3 days of trading. And so the expectation is for a sideways choppy open, a fair size rotations to open with. Expected a push towards the point of control from the prior day, which is at 2139-ish. And then looking for the sell-off, the beginning of a sell-off, and the target was 2126. That's where that line is, 2126. That was the primary hypothesis. I went over the reasoning behind that. And then the secondary hypothesis is to poke down below because of the weakness that we saw overnight. We're expecting, in either case, or the highest probabilities, an overnight low touch. And once it touches the overnight low, which is also the prior day's low, then we're looking for a pop-up to the point of control and sideways. That was the secondary hypothesis. The tertiary hypothesis is a choppy open, a quiet open, and then a dip towards the overnight low to find buyers, push up higher to 4150, which is the MC point of control, continuation of 4450. Let's look at what actually happened versus our expectations. Let me erase these. There it is. So it's an open auction right here. Took a while to get a clear point at the opening swing. The opening swing could also have been down here at 34.50 or 34.75 or so, something like that. 35 actually. But I chose the clearer swing, or the clearer top of the two. It took about 7 minutes to complete the opening swing, which is pretty normal. Here we get the dip below the overnight low, below the prior day's low. It tests through the point of control, pushes through by a bit, 41.25. Remember, I was expecting 41.50. 41.50 comes from here. That's the MC point of control. And then we had this impulsive move down And I got to tell you, yesterday's trading was kind of rough. It just kept running through key areas. It seemed like there was some positioning going on. A higher time frame trader, participant, or participants were in control yesterday and swinging across day time frame levels back and forth. So this setup here is a bread and butter setup for me. A pullback to mid or to the OS, chop around, and then continue higher to 44.50. That was a high probability bet, and it bounced off the opening swing, and then it just exploded downwards. And then on the way down, on the way back, we did get to 26.75. Our key target for hypo one, if you recall, is 26 even. So here's hypo one. We're looking for 26 even right here, and it stopped 3 ticks ahead of it and bounced back up. No respect to the IB. It gave the OS more respect for some reason. Um, and and then it breaks right through the mid again to push to 40 quarter and then just chop around sideways. So yesterday we had hypo 1 and hypo 2. It had both. Well, it had elements. This is an element of hypo 3 right here. This is the target of hypo 1 right here. And then this is the sideways chop of hypo 2 right here. So maybe add those up and call it hypo 6. I don't know. But that's how it shaped up. And we ended up with a point of control that's completely Gaussian here in the middle of the initial balance. Very, very balanced profile. The market just absolutely did not want to reprice yesterday. It was hanging on to prices right in this area. In fact, it was hanging on so tight it moved the point of control lower. So if I look at my bigger picture flex chart here, you'll see that the point of control. Well, it's actually not this chart. So there you see the point of control shifting down from 41 and a half down to whatever it is, 32.50, and then settling in at the end of the day at 35. The last bar moves it to 35. So we moved yesterday. We had 3 moves on the micro composite point of control, which is fairly uncommon to have 3 moves in a day. After the initial bar, we moved down to 32.50 from 41.50, and then as the day went on and the close came around, it moved to 35. It indicates that this profile is very blunt, and it's still not able to reach consensus and is not finding its groove. This morning, it is testing lower. It's repricing lower. As you can see here, it is trading at 24.75. So that's the summary of what happened yesterday. This morning, the market's not able to hold on to any longs here. It's been tracing. Here's a tag of mid, tag of mid, tag of mid. It's not able to find buyers, sustainable buyers, and has just let it all spill right in this last couple of bars here between 7:30 and now. So that's what we have to deal with today. Sellers are in control. By the way, note the volume delta, pretty aggressive on the downside. I wanted to share something with you real quick. I don't know how many of you watched the event this past Tuesday for FIO. If you haven't, go check it out. It talks about trade execution. It's part 4 of the mini series where I just go take you from trading techniques all the way up to execution. Somebody posted this in our S5 chat room, and I just wanted to point out, the comments here are interesting. It says should have bought this break. This is the ES yesterday, and you could see that the rotations were pretty strong. Let me change my color. The rotations were pretty strong on this, as shown on the S5 book map, just ripping up and then falling right through. And what I want to point out is It doesn't, I cannot predict that this will happen. I can't predict that these impulsive moves down will happen. But I want to point something out that I tried to point out in the webinar um, that maybe didn't come through for some of you. See this here? This red dot, it is a sell dot. It's a predominant seller at that price. And when the red dot meets a white line, like you see there, the white line is a bid, is a resting bid at that price. When the white dot meets the red line, I call that a collision. And what's important is it's it's hard to sell a collision because it's happening within milliseconds. But what's important is what happens next. This is the opportunity for me. When I see a collision at the bid or offer in an area of interest, I'm looking for the pullback. I'm looking for the pullback for the continuation trade. And in this situation here, it would have yielded about 2 points. But look at how the market consistently pulls back to these collisions. It does it more so in on the thinner products, crude oil, and so on. Just this software has really made it much easier to see what the market's intentions are versus versus what it actually did. It shows both. So I just wanted to point that out as for those who are interested to explain what that's like. If you're interested in that software, just shoot me a message. It's on the Stage 5 website. Anyway, I'm not here to hawk software. It's just I think it's a game changer to look at the market from that perspective. If you're click trading, of course, if you're an automated trader, it's not going to make a difference to you. So this morning, what are we expecting? This morning we are inside of this range still. So I'm going to put up a temporary composite just to see what's going on in here. And you can see most of the volume is up higher in the 36.75 area up here. 36 or 37 area. So the resistance is above us. The expectation this morning is for an open auction. I'm looking for a responsive pullback, and pay attention to the overnight. Hang on, let's switch gears here quick. Pay attention to the overnight mid here and the overnight VPOC. And so I'm looking for a push. Oh, let's enlarge. I'm looking for a push into this overnight VPOC and mid right here. I'm looking for, and that's yesterday's value low. I'm looking for a fair amount of resistance. So open auction, fair amount of resistance right here, a fight, and then I'm looking for a continuation, the break of overnight low, continuation to 2050, pullback, and then for us to start tiptoeing on our way down to 2115, and then potentially continuing on. I don't know, but if it starts to move faster, the range could expand quite dramatically in 2103. The bottom of this low volume composite low volume node becomes the extended target, and of course 2100 behind it. That's the primary hypothesis. That's the high probability play today. The secondary hypothesis does not stop at the overnight point of control, mid, and yesterday's value low. That's yesterday's value low, which is valid. We had a somewhat of a Gaussian profile. The secondary hypothesis, same thing, but it actually manages to pull back into above yesterday's low and to push into the prior day's range. I'm looking for the value high to be the cutoff point, and I'm looking for sellers to pop back in and to start pushing us back down. And then the target for number 2 is 2120.50. Okay, and then we are in balance. There's a remote possibility for an OTD or an open test drive or an open drive on Hypo 3. It's not a high probability because we are inside of this range here. We're not in new territory, but the possibility exists that we test the prior day's low in an open test, and then we drive right through and down, and we're looking for some strength in this move. Hypo 3. This is a remote possibility because it's Friday and because we're still inside of the microcomposite balance. We still don't have maturity in that balance as far as I can tell. And so, but it's still out there because we're opening out of range. Anyway, that's all I have for you. Please remember to hit the like button. If you don't see it, just hit the YouTube button at the bottom of your screen. That takes you to the YouTube version, and then you can just hit like over there. I'll catch you on Monday. Good luck today. Take care.